new financial year has started from April 1. Along with this, many rules related to income tax have also changed. Now, with the start of new financial year, the time has also come for fresh tax planning. In such situation, it is important to know about the new rules before tax planning. So let's get to know about 10 major changes related to tax implemented for financial year 2023-24, which will have direct impact on your pocket.
The new tax regime will be the default tax regime from this year. If you do not choose either new or old tax regime, then the new tax system will be activated. If you want to continue with the old tax system with deductions and exemptions, then you have to choose the old system. In the new tax regime, the tax exemption limit has been increased from 12,500 rupees to 25,000 rupees under Section 87A. In such a situation, no tax will be levied on a taxable income of just over 7 lakh rupees. There is no tax on income of up to 5 lakh rupees in the old tax regime. Tax exemption limit and income tax rates have been changed in the new tax system. Now there is no tax on income up to 3 lakh rupees. 5% on income of 3 to 6 lakh rupees, 10% on income from 6 to 9 lakh rupees, 15% on income from 9 to 12 lakh rupees and 20% on income from 12 to 15 lakh rupees. Also, 30% tax on annual income above 15 lakh rupees. Standard deduction for salaried person will now be part of the new tax regime, and under this, the taxpayer will get a deduction of 50,000 rupees. Salaried person earning 15 lakh rupees or more will get a benefit of 52,500 rupees in the form of standard deduction. The limit of tax exemption on leave encashment for non-government employees has been increased to 25 lakh rupees. Earlier, it was only 3 lakh rupees. This will reduce the tax burden on the employee at the time of retirement or leaving the job. In the new tax regime, the high surcharge has been reduced from 37% to 25%. These rates will be applicable on income above 5 crore rupees. The reduction in surcharge will reduce the tax burden on heavy earners. There is also relief for small taxpayers. The government has given more relief to the small taxpayers in the new tax system. There is no tax on income of up to 7 lakh rupees. But if the same income becomes 7 lakh and 100 rupees, then 25,000 rupees tax is levied. In this way, the government has given relief to such taxpayers whose income goes slightly beyond the scope of tax-free income.
Whether it's the new or old tax regime, do calculate which one will be beneficial for you. For this, you can calculate the tax in both the tax regimes according to the estimated income of the financial year 2023-24. If required, you can take the help of tax calculator or chartered accountant for this, who are available on the website of Income Tax Department. Apart from the tax system, there have been changes in the tax rules regarding property, debt mutual funds and insurance. So, let's take a look at them now.
Long-term capital gain benefit on debt mutual funds has been abolished. From April 1st, short-term capital gains tax will be applicable on redeeming investments made in debt mutual funds after April 1st, 2023. That is, tax has to be paid according to the tax slab. This rule is applicable to those debt funds whose investment in domestic equity is less than 35%. This will also affect gold and international mutual fund schemes. Benefit of LTCG is available on investments made before 31st March 2023. Redeeming after 3 years of investment in this will attract 20% tax with indexation benefit. Short-term capital gains tax will be applicable if the holding period is less than 3 years. If the total annual premium of a life insurance policy or policies purchased on or after April 1st, 2023 is more than 5 lakh rupees, then the amount received on maturity will be taxable. This rule will not apply to unit-linked insurance plans. Under Section 54 and Section 54F from April 1st, 2023, tax exemption will be available only on capital gains up to 10 crore rupees. If a person buys a residential property from the profit of a capital asset like property or shares, then the limit of tax exemption on profit will be only 10 crore rupees. The capital above this will be taxed.
These major changes have come into effect from 1st April 2023. Apart from this, some other rules have also changed, like 30% TDS will be levied on withdrawal of winning from online gaming, tax on the amount received by REIT and InvIT unit holders as repayment of loans, Capital gains tax will not be applicable on converting jewelry and coins to electronic gold receipts, that is EGR, and EGR into physical gold. Interest claimed under Section 24 will not be included in cost of buying the house. Also, earnings from redemption of market-linked debentures will now attract short-term capital gains tax.